So in the month of May, I received 9 dividend payments from some of my favorite companies, including legendary dividend kings like Proctor and Gamble and Lowe's. And in this video, we're going to go through each of those payments and add them all up to reveal my dividend income for the month, as well as my total income received so far in 2024. But before we get to those, I want to hear from you. Leave me a comment below and let me know which stocks paid you a dividend this month. I'd be curious to hear if we have any of the same ones. Anyway, getting into it, guys, the first payment that I received this month came from Lowe's, who paid me $18.03, which was a great way to kick off the month. Lowe's is one of the most iconic dividend kings out there with a 60-year growth streak. And if we look at the dividend history chart here, this is exactly what you want to see. And then looking at the share price performance, it appears as though Lowe's has fallen on some tough times. Just in the last 30 days, this company is down 7.25%. So that's a pretty big drop, which leaves them with a year-to-date decline of 3.3% and a share price sitting at about $215, which is still a bit above my average cost per share. If we take a look at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to download the spreadsheet in the description of the video. Here we can see I currently have about 16.4 shares of Lowe's at an average cost of $194.50. So like I said, the current share price is still a bit above my average cost per share, and this is leaving me with a 10.65% share price return and about a 14.5% total return. And if we continue to see the share price pulling back, which is totally possible, I'll likely start adding to this position again, but I'm holding off for now. Anyway, guys, moving on to dividend payment number 2. This one came from Enterprise Products Partners, EPD, who paid me a whopping $58.11, bringing my total so far in May to $76.14. And if we take a look at my EPD position here, this is one of the few companies where I have over 100 shares. And to be exact, I have 112.8 shares of EPD at an average cost of $23.88. So the current share price is still quite a bit above my average cost per share, which is leaving me with about an 18% share price return. And on a total return basis, it's about double at 36.6%. So about half of my total returns with this position are coming from dividends, which makes sense considering this is one of the highest yielding stocks in my portfolio. And taking a deeper look at the dividend stats, EPD is boasting a 7.3% yield. So like I said, this is going to be on the higher end for sure. And the 5-year growth rate's really not too bad considering how high the yield is at 3.2%. And EPD is a dividend aristocrat. They've been growing their dividend for the last 25 years. Now, I really like having EPD in the portfolio, but one thing to keep in mind with this company is that it is a master limited partnership, or an MLP, which means that come tax time every single year, instead of reporting that income with your standard 1099 like you would with all the other companies in your portfolio, with an MLP, you get what's called a Schedule K1 form. And a lot of people don't like investing in MLPs for that exact reason. They don't want to have to deal with that extra form come tax time, which is totally understandable. But I will say, in my experience, it's been a very easy thing to deal with. It's usually just an extra few minutes, but nonetheless, guys, definitely something to keep in mind if you've ever considered investing in a company like EPD. But anyway, moving on to payment number 3. This one came from Proctor and Gamble, one of my favorite companies, who pay me $28.23 in May, bringing the total so far officially across the $100 mark to $104.37. And Procter and Gamble has actually done pretty well so far this year. If we take a look at the share price performance in the last month, this company is up 3.2%. So not a bad gain in the last month, but looking at the year-to-date performance, it's really nice. Procter and Gamble's up almost 13%, and they're actually beating the S&P so far this year. And jumping over, taking a look at my Procter and Gamble position, I have about 28 shares at an average cost of $139.20. So the current share price is quite a bit above my average cost, which is going to leave me with an 18.8% share price return and about a 24.5% total return. So we're looking good in both departments. But anyway, guys, moving on, this brings us to payment number 4, which came from AbbVie, who pay me $15.59 in May, which brings the total so far for the month to $119.96. And I really don't have a big AbbVie position at all. As we can see, I only have 10 shares of this company, but my average cost is looking pretty good at $114.20, which is going to leave me here with a 37.5% share price return. That's pretty dang solid. And on a total return basis, it's looking even better at 52.3%. I will take it. And now, guys, jumping over to payment number 5, this one came from the monthly dividend company, Realty Income, who paid me $25.74 in May, which brings the total so far to $145.70. And as opposed to what we saw with Procter and Gamble a moment ago, Realty Income has had a tough time so far this year. So we can see in the last month, Realty Income is down about 2%, but year to date, they are down a whopping 9%. And if we take a look at my position, I have just about 100 shares of Realty Income at an average cost of $54.45. So I am down just a little bit with this position right now. To be exact, I'm down about 4.2%, but my total return with this position is still in the green. Thank goodness for those dividends. They're definitely saving me here. And on a total return basis, I'm up about 4%. But anyway, guys, jumping over to payment payment number 6, this one came from the other monthly paying dividend stock in my portfolio. We're talking about Main Street Capital Corporation, who pay me $13.50 in May, bringing the total so far to $159.20, and Main Street continues to crush it, guys. If we look at the share price performance, it's actually pretty flat in the last 30 days. They're only down about 0.5%, so nothing good to report there, but looking at the year-to-date performance, Main Street is up 13%. So they are beating the S&P 500 so far this year, and if we zoom out once more, looking at the performance over the last year, it's even more impressive. They're up about 27%. And with that jump in share price, right now, my Main Street position is looking really good, guys. I have about 56.25 shares of this company and an average cost of $40.66. And if we slide over looking at the returns right there, it looks like I'm up about 19.4%. And on a total return basis, it's looking even better. I'm up 35.3%. And with that, guys, before we move on to this next dividend payment, I just want to warn you real quick. If you're standing up, you might want to sit down for this next one because this next dividend payment is pretty crazy. I don't even know if you're going to be able to wrap your head around how crazy this dividend payment is. This one, guys, came from Apple, who paid me, are you ready? A whopping $1.66 in May. Can you believe that, guys? But anyway, that brings our total to $160.86. And all jokes aside, Apple actually had a really solid month. Looking at the share price performance, in the last 30 days, Apple is up 13.4%. So some really strong performance from Apple. If we look at the year-to-date performance, though, they're still down a little bit. They're still down 1.3%. And if we look at my position, Apple's actually one of my smallest holdings, as we can see. I only have 6.6 shares. My average cost is looking pretty good at $129.50, which is going to leave me with a share price return and a total return that are pretty much neck and neck with each other. I mean, about 47%, let's call it, in both departments. So overall, even though this is one of my smaller positions, the little bit that I do have is still looking pretty good. But anyway, guys, jumping over to payment number 8, this one came from Williams-Sonoma, who paid me $20.34 in May, which brings the total so far to $181.20. And this was my first dividend payment from Williams-Sonoma since they raised it a couple months ago, which was a crazy 26% increase. And just from the increase alone, my quarterly payment went from being about $16 to where it's at now. And that's why I love these dividend growth stocks. And if we jump over looking at Williams-Sonoma's share price performance, this was actually the quietest month they've had so far this year. In the last 30 days, Williams-Sonoma's only up about 0.5%, but if we look at the year-to-date performance, it's still outstanding. 42.6%. And as I'm sure you can imagine, this is going to leave my position in a really great spot. I only have 18 shares of Williams-Sonoma. I wish I would have bought more when I first started adding to this guy, but my average cost is at $133.08, which is going to leave me, guys, with a 116.25% share price return and a total return that's just a little bit above that at about 118.7%. But anyway, moving on to this last payment here, guys, this one is going to come from Starbucks. And at the time I'm recording this video, I actually haven't been paid this dividend yet. Starbucks is going to pay this dividend on May 31st, and for me, it's going to come in at $33.23. So that'll be a really nice dividend payment when it comes in, and we talked about it in the last video, but Starbucks has had a horrible year so far. If we look at the share price performance, they are down 9% just in the last 30 days. So we can see they really jumped off a cliff right here. But anyway, this is going to leave them with a year-to-date loss of almost 18%. And you better believe with this drop, I have definitely been swooping up some shares of Starbucks. I think just in May alone, I've added 8 shares to my position, which is going to leave me with a total of 61.4 shares of Starbucks at an average cost per share in the high 80s, $88.60, which is not too bad, but still quite a bit above the current share price, which is going to leave me with an 11% share price loss and a negative 6.7% total return. So all across the board, I'm down with Starbucks, but I'm just going to keep adding to this position while it's down. This has been really fun to buy on the dip. But anyway, guys, with this final payment from Starbucks, that's going to bring my total dividend income for the month of May to $214.43, which is about an 8.7% increase compared to this time last year. In May of 2023, I brought in $197.29, so we got a nice little year-over-year boost there. And looking at this on a year-to-date basis, so far in 2024, I have brought in exactly $1,081 in dividends, which is a crazy 23.65% increase compared to my year-to-date income from last year. In the first 5 months of 2023, I only brought in $874.22, so I'm really happy to see this portfolio continuing to make great strides, and I'm really stoked to see these year-over-year gains. And with that, guys, now that we've taken a look at all of my dividend payments from this last month, I want to switch gears gears and show you which companies are going to be paying me in this upcoming month here in June. And to do this, we are going to be looking at the dividend calendar tool over here on GetQuinn, which outside of my spreadsheet is hands down my favorite portfolio tracking tool. And if you're looking for something with more features and functionality than your standard spreadsheet, then I think you'll really love using GetQuinn. This has one of the best looking interfaces I've ever seen, and it's a great tool for keeping track of all your portfolios, all of your holdings, and all of your dividend payments in one place. You can automatically sync everything right here within the platform, and you can use it for free. There is a link to GetQuinn in the description of the video, and if you end up making an account, shoot me a follow on there. My username is just Ryne, so it'll be pretty easy to find, and on there you can see my full portfolio. But anyway, I'd love to connect with you guys on the platform. But anyway, guys, looking at all of my dividend payments for June, it looks like the first one that I'll get is going to come from Visa, who on June 3rd should pay me $7.75, and then the next few days are going to be really nice for dividends. The next day I'll get a nice $41.15 from Johnson & Johnson. That'll be a pretty sweet payment there. And then a couple days after that, I'll get another one for $12.86 from Southern Company. Then here on the 10th, I'll get $16.70 from Snap-on, and on the same day, I'll also get $31.41 from Chevron. That'll be a nice payment. And then scrolling up just a little bit, it looks like midway through the month, I'll get a couple payments on the 14th. We got one for $26.29 from Realty Income, and then another one for $13.50 from Main Street Capital Corporation. As we can see too, this is going to be payment number 1 of 2 from Main Street. A couple weeks later, I'll get, I think this is going to be their special dividend from Main Street, so about $16.88, almost $17 for that special dividend. That'll be really nice. Then I'll get a really solid payment from SCHD, almost $50. And as we can see, the ex-dividend date for SCHD actually isn't until June 21st, so I've got time to continue stacking up some shares, and I bet you I can get this payment to be over $50. That'll be really cool. But anyway, with all of these payments combined, it looks like for June, I should be bringing in about $216 for the month, which is not all too different from what we saw in May. So overall, June is shaping up to be another really solid month of dividends. And with that, if you're in the market for some cheap dividend stocks, and check out this next video right over here, where I'm telling you about 3 that are deeply discounted and all look like great pickups right now as we jump into June. So click right over here to check those out, and I'll see you in the next one.